Hello and welcome to another episode of Invest Zero Sum, the show where we cut through the noise on markets, money, and geopolitics. The past few weeks, I have been trying to go about my life in a way where I actively keep track of how long I can go without someone bringing this up or ending up thinking about it myself. I might even be dreaming about it for all you care. Let me give you some quick context. 6 weeks ago, semiconductor stocks had one of their worst weeks in years. The Philadelphia Semiconductor Index, which is often seen as a benchmark for all this, dropped 10% in 5 trading days, and half of the financial world was writing an obituary for the AI trade. Fast forward to today, Micron is sitting on $1 trillion market cap because it sold every single unit of high bandwidth memory it can make this year, before it has even made it, in fact. NVIDIA is walking into its August 26 earnings print with almost every analyst on the Wall Street rating it as a buy, and one very loud short seller calling the whole financing structure circular. Biblical, take your pick. Today we have someone with us whose brain we can pick to understand this a lot better. The subject is everyone's best friend and possibly their biggest enemy. We are yet to find out. Our guest today is my favorite stock market analyst and a friend of the pod.
This is very impressive stuff. We don't want to see a lower number there if you're an NVIDIA bull. It doesn't pass the sniff test. I've heard anecdotal evidence.
David Morrison, senior market analyst at Trade Nation and a regular columnist at Sky Business and Invest. David, welcome back to Zero Sum. How are you doing today and how's life?
Well, thank you, Harsh. That's a lovely introduction. I'm doing very well, thank you. All's good. Still enjoying the summer. I hope you are too.
Well, I could say that I'm enjoying the summer, but also I think we need some rainfall right now because, I don't really like the idea of, the grass around me just going brown. I mean, have you seen the parks here? They look like something else.
Yeah, it's extraordinary. I live between Wandsworth and Tooting Common, so I go past them quite a lot. And it still is quite breathtaking to see how much of it is brown. There's no green until you get right over to some properly old trees. Yeah.
There was a semiconductor sector whiplash this year, right? 10%
Yes, there was.
sell-off, SOFX, followed by record highs, which is happening as we speak. So what has changed in this very short period of time?
I think it's very interesting because we had that sort of incredible semiconductor catch-up earlier in the year. A lot of the stocks which weren't overlooked, but I think that there wasn't the same kind of broad-based interest that there was in, say, Mag 7, and then narrowing Mag 7 down to hyperscalers. So these are the sort of the big players that were getting all the attention. And then, actually, I've just left NVIDIA out of this, but NVIDIA was at one stage the only chip designer in town. But then we saw the likes of Micron Tech, Marvel Tech, AMD, all these others sort of start to catch up. SK Hynix, another one, obviously, Samsung Electronics, all the Korean companies, that they all started to really catch up about sort of March onwards, from what I remember. And then, as quickly as they'd gone up, there seemed to be a bit of an air pocket, and down they came, starting around June, some of them in May, but mostly sort of June time. Right the way through until the end of July, there was this huge sell-off. Now, I think there are a number of reasons for that. I think the first one was they had probably gone up too far too fast. I think there was a loss of leverage in the system, and that needed to come out. There were questions: how are we going to get return on this, and when are we going to get a return on this? And also, hang on, what's this with NVIDIA sort of giving, however many billion to this company, that company, and all the sort of the financing started to look a little bit circular. So people got a bit worried about that, and we saw that big sell-off occur. At the same time, there was a lot of rumors going around about a hedge fund, which turned out to be Situational Awareness, which was very highly levered. It was doing very well.
We need a full episode.
But the short story was it unraveled as those tech stocks came off. It exploded. It wasn't a big hedge fund, but it was invested in a very crucial part of the market. And yet suddenly it didn't matter anymore. The reason it didn't matter was because Citadel came in and just snapped up. Instead of there being a terrible forced sale, that situational awareness having to sell off all its holdings, Citadel came in and at the right price, they just picked the whole lot up, as far as I'm aware in the story.
Yeah.
And that sort of put a sort of a stop under the market. And then at the same time, we had results from Amazon and Microsoft, which actually showed incredible growth in cloud computing. They could actually see revenues coming off the spend. And this sort of turned the whole market around almost at once on a sixpence. And suddenly we had this great big bounce back, which, pretty much has continued now, where we've seen hyperscalers, we've certainly seen the chip stocks make back a lot of the losses that we saw throughout, say, July in particular. So those are sort of the things that helped stabilize things.
Yeah, in fact, Micron, one of the companies you mentioned, they have sold out its entire 2026 HBM capacity, even before making it. I mean, it's just a bit bizarre. On one level, we are talking about what will AI do, what will AI not do, and what sort of revenues might come or might not come, and there's lots of spending happening without any real numbers. So is this just pricing power or a supply chain, time bomb waiting to go off? What is happening with this?
Well, as far as the markets are concerned, investors are concerned, it is evidence that this is a durable story. The earnings season, we saw the sort of the kind of earnings growth, a lot of it being driven by the AI adjacent stocks, let's call them that. A lot of it being driven by that. We've got year-on-year earnings growth of over 50%. This is the highest since the second quarter of 2021, when we were coming out of COVID after all those lockdowns. It's incredible. And we've already come from quarters where earnings growth has been double digits, quite extraordinary. And the Micron tech story is fascinating, because you're saying about those chips, and they are arranging contracts now for the sale, the price, and delivery of chips going out, as you said, to 2020, next year and even beyond. And these are sort of fixed contracts. Now, this isn't sort of working off the spot price where things are now. It's actually locking in those sales and that those amount of chips, so that price in the future, which underpins the whole idea that this is a growth story, but it's also one that is on solid foundations. Now, that's not to say it definitely is, because I don't know the nature of those contracts, but chips get upgraded. I mean, we're seeing this with NVIDIA all the time, with Blackwell. Now we've got the Vera. I'm sure China will have some involvement in this as well. So I'm just wondering sort of what Micron are contracting to. Is it all going to be standard HBM chips that they're making now, or is it going to be something different? I don't know. Well, I suppose that's for them to decide. But I think the bottom line is that, it's evidence. We're not just betting on growth and future growth. It's evidence that it's already paying off, and so could continue in the future.
The fact that things get outdated really fast in this world is something that needs to be factored in too. So yes, you are producing these chips. I mean, it's like any other technology, right? You buy a television today, and then next year you're like, oh, and now I need to buy a new television because now there is 8K. Why do I need to buy an iPhone 17 and then 18 and then 19 and 20 every year? I don't know. The fact that these chips are being produced for a certain duration of time. What if by the time realization comes, these things become outdated, especially with AI self-evolving in so many ways? And
well, there you go. You're talking about sort of an AI which is developing and building on what it's learned at a tremendous pace. We know that people are working on this. We know that there are new developments all the time, and why wouldn't there be? The actual margins on some of this tech is extraordinary. So it's quite a grail to be sort of searching for, to get out there and get that new stuff out there.
I keep using Claude every now and then, and Claude sometimes rejects me, right? So what if AI chips reject the chips that these companies are producing? Anything can happen.
Well, quite. I mean, when you think of AI, whatever, jumping its box and actually causing the kind of havoc that we've heard it did with Hugging Face, I mean, I don't think many people expected that.
Yeah, I mean, I was speaking to Tyne, our producer, before our call.
Yeah.
It's just, we were talking about how it goes from good to to great to scary very fast. Yeah, it's all a bit, all is happening at the same time. But yes, a big number to watch is
Yes.
NVIDIA. We can't go around
Yes.
talking about AI without talking about NVIDIA, which reports its numbers on August 26th. And the revenue
Yeah.
guidance right now sits around 95 billion. But what's the one number that you will be watching specifically when it comes to NVIDIA?
I think margins is the one I'll be looking at NVIDIA. I think the market would be very disappointed if that number doesn't come in either at 75% or above. So we don't want to see a lower number there if you're an NVIDIA bull. With NVIDIA, where we are at the moment, it's forward guidance with them, isn't it? I mean, I think we've had something like 7 consecutive quarters where they have beaten on earnings, on revenue expectation, perhaps with one exception, projected unbelievable forward guidance, as in stripping even the highest expectations.
Yeah, unreal numbers.
And that's now, of course, after 7 quarters. I mean, it could have been after 2 or 3, but it wasn't. It's after 7, and maybe it will be after 8, 9, 10. Who knows? This could be another perfect quarter, but it's still going to be a high hurdle for the corporation to jump, and everyone's going to listen and say, I want to know what Jason Wang or his CFOs say about how the company is going, where it's going, and what business is like. And I suppose they'd also want to know, who are the future customers as well. Are we still talking about the same hyperscaler, same companies coming back time and time again? Is there a broadening out of its customer base?
Or is it just Broadcom?
Yeah. Yeah. So I think those would be interesting things to listen out for, or in addition to the sort of like those headline figures.
How do you feel about the fact that Michael Burry has called NVIDIA's financing arrangements circular? It's concerned that a lot of even bulls share, like Bernstein, I mean, they have acknowledged it. But at the same time, they maintain a buy rating. So, I mean, you are concerned about it, but still maintain a buy rating. How do you explain this to the audience?
You've got to agree that these are growth and they're high risk. These are not value dividend paying stocks. These are not the boring stocks that sort of go up maybe a couple % a year, but chuck off a nice dividend for you, and you can rely on year on year on year. These are the stocks that would be up 200%, down 150%, and everything in between. So they're not really for everybody. I would suggest that if people have got this stuff in their pension and they're sort of getting anywhere near pension age, they should really look about doing something about that, because this is the kind of stuff which you can make a lot of money, but it can also destroy your pension fund if things do go wrong. But I've heard anecdotal evidence that actually sort of people of my age and above, and we're talking about quite old here, are complaining to their brokers for not having them fully invested in the tech sector. Which I think is kind of dangerous. So actually, I've only said this because you were asking about how you explain this to the public.
Yeah.
This is very impressive stuff. They're displaying a lot of earnings growth, that the revenues are coming in. I mean, if you look at the XAI, the AI function within SpaceX, it's still making a loss, but it's shown, I mean, the figures showed exceptional growth over the last quarter. So it's high risk from a broker's point of view. They're warning about those risks, as is Michael Burry and the other chap from The Big Short, Steve Eisner. I think he's come out as well. So now we've got 2 of the people who got the housing prices and the GFC correctly called eventually doing the same call on AI now. So we'll see. It takes time for these things to play out. So
one thing that really caught my attention is how NVIDIA disclosed a $21 billion stake in SpaceX, and that is a very interesting part of the circular AI capital business that is going on.
Isn't it though?
One leather jacket guy to another leather jacket guy.
Yeah.
A bunch of billionaires playing around.
That's extraordinary, isn't it?
Yeah.
There are all these sort of interesting tie-ups that have been going on, and all those sort of private placements and private offers that have been going on within this. And I mean, I think sort of after the SpaceX one, there was sort of a fairly sleepy UK fund that had a whopping great holding in SpaceX because of an investment it had made a year or 2 ago, through a private placement. So it crops up in all kinds of places.
It's a bit confusing to me. I feel like I mean, the question that somebody was asking me recently was, is this diversification on NVIDIA's part, or is this the same handful of AI winners increasingly investing in each other's balance sheet? Feeding the exact circularity concern, and which is already there, right?
Yes.
I found myself at a major loss. I could not come up with an answer because my heart, sorry, I get emotional about these billionaires talking about these absurd amounts of money, right? Like my
Yeah.
heart thinks that this is, if I have to think emotionally, I feel like this is basically people making a fool out of common investors, right? Because you are just spending money, taking money from one place, putting it another place, and making it look like it is doing great.
Yes, I get what you're saying there completely, Harsh. I totally agree with you as well. There's something that sort of is a little bit it doesn't really sort of pass the sniff test. It does look like there's a lot of back scratching going on, but also everyone's boosting their own things that they're highly invested in, and it sort of seems to be like it's a lot more to do with balance sheet than actually growing. But I suppose on the other hand, it shows that they are fully invested, completely believe in what they are doing here. You sort of suddenly found out that Peter Thiel, for instance, had no position in SpaceX or NVIDIA or whatever it might be. That would sort of be, oh, blimey, well, if he's out, I think I should probably be out as well.
Yeah.
But on the other hand, of course, people look at investors like that, like Elon Musk and whatever, and they think, well, look, if he obviously believes in this, I'd be mad not to believe in it too. And of course, the fear of missing out, and you get involved like that way. But it's like anyone, we're all very different.
What his risk appetite would also be very different from us. In fact, the other day I keep having these conversations around AI and billionaires and trillionaires. This friend of mine was like, "Oh, $1 billion is lots of money, but I would like $100 billion." And I'm like, if somebody gives you $1 billion, you would have a really hard time spending it. There aren't enough things in the world to buy. What is the most expensive thing you can imagine?
Yeah, I'm with you. I'm with you, and I really don't want a yacht. I can't imagine anything more of a pain to have, But there you go.
Just rent a yacht. I mean, I can't even rent a yacht, but yeah, I mean, if you were to, money becomes slightly I mean, this is a thing that rich people probably say, that money becomes inconsequential after a certain point of time, right?
Yeah.
No amount of money in the world can buy you a second of time. That's life, and that. Sorry to get philosophical here, but you die, right? You might
exactly.
Even a private plane can crash. In fact, they crash quite a bit, more than passenger planes. Yeah.
Is that right? That's interesting. Yeah. Nothing can buy you an extra second of life. I mean, I don't think it's even working out for that guy. What's his name? Is it John? Anyway, the guy who's doing all he can to sort of make himself 20 years younger than he is and everything.
Oh, yeah. Brian Johnson something.
Brian Johnson, that's the guy. Yeah.
Oh, my goodness. We at Invest have spent the past decade and a half providing our 1.5 million monthly readers with the latest news and why it matters. If you are enjoying this episode so far, please do us one quick favor and hit the like button. And if you have an idea on what we should cover next, please do let us know below in the comments. Thank you. Now back to the show. SpaceX, since we spoke first, it crashed. It went down to as low as 110. Something people were saying it will go below 100. And now it's back up to 140, 150.
What a story that SpaceX has been. I mean, this is the biggest ever IPO by a long stretch, 75 billion when it came to it. I know we were talking about this before the IPO, and I think it was an extremely successful IPO. $135, $135 the IPO price. First trade, I think, was about 160.
Yeah.
And I think it ended the day at about, was it around there, something like that. It's either 150 the opening trade, and we ended at 160, and then the following week we hit a high just below $230, and then it was just down from then on, down to a low of just under $105. But the interesting thing was that sort of low came around just around the time, a couple of days before the lockup. And it also came around the time that SpaceX came up with its quarterly earnings.
Sorry, can you explain lockup to a general audience? Because a lot of people don't really know what lockup is.
Let's do that. Yeah. Okay. So as well as being very clever in the way SpaceX was priced, Elon Musk and his advisors were also very canny in the way they allowed existing shareholders to take advantage and sell their existing shares into the public market. Now, bear in mind that before the IPO, people owned shares in SpaceX because they had invested early. All the little ventures, all the things that went on to make up SpaceX itself, whether it be Starship, the launch, XAI, Grok, all those bits and pieces. So they were early investors. Therefore, once the stock IPO'd, they were allocated X amount of shares, let's say, with Elon Musk being the biggest, obviously, because I think he still owns like 85% of the company. They're not allowed to deal, for instance, say the first 3 months, or in this case, what was it, June, July, August? It was the first 3 months. The first lockup came just after the release of quarterly earnings. And that's, as you said, was what, 911 million shares?
Yeah.
It released?
Yeah, 911 million shares, yeah.
Okay, and I think there was something like the IPO was 200 and something million shares.
280.
So you've got 3 times as much shares that were that came out the IPO. Everyone knows has the potential to hit the market on the 6th of August. But the market had all this time to adjust to that, which I think is probably why we saw this sort of slide down from 230 down to 105. And now we've seen SpaceX pick up quite nicely because there are more lockups to come. I think there's another one in September.
One more coming up. Yeah.
One more coming up. And then there's a really big one, of course, which it relates to Elon's own holdings. And he's locked in until next summer. So he can't sell any of his holdings publicly, at least. I don't know if he's allowed to do an off sale with a mate. So that's the lovely thing about it, is that everybody knew what was coming. It's all there out in the open. And I think the market and the share price adjusted beautifully to it. So there's still that sort of feeling that there's something about SpaceX and what it's doing and what its aims are and what it could do in the future, as well as having actually quite a good earnings result. So good results over earnings season. And those have all helped to lift the price as well. So well done.
Yeah, it's all about sentiment. Yeah, well done, Elon.
Sure.
I mean,
absolutely.
If he's listening to the podcast,
yeah, as I'm sure, I believe he's a listener, isn't he? No, I mean it was.
That would be something.
It was done beautifully. The whole thing was arranged very, very neatly, I think.
Yeah, very, very cinematic.
And talking about sort of knowing when to get in and get out, I think it's quite interesting that we talked about hyperscalers. We talked about the money that AI infrastructure building is required. What we haven't talked about, although it was very much a feature, I think, of the earnings season, was how a lot of this spending it's so big that it can't just come out of free cash flow. And if you think about Mag 7 back in the day, Mag 5, Mag 7, whatever they were, these were companies that didn't really need debt. They were churning out cash quarter after quarter after quarter, reinvesting, doing whatever, share buybacks, and now they're not doing that anymore because they need everything they can get to push into AI development. And so you've had some of the hyperscalers coming to the bond market and even selling their own stock. And bear in mind that when they were doing share buybacks sort of a year or so ago, whenever it was, the stock was a lot cheaper than it is now. So if they're selling their stock now, I don't think there are very many doing this, but the ones that have capitalized and done a wonderful trade. So they get a round of applause as far as I'm concerned.
But if somebody is sitting on gains in NVIDIA or Micron, and you see how the market is shaping up, so to tie into when to buy, when to sell, we are heading into quite a few catalysts, right? What is your one piece of risk management advice to anybody sitting on any of these stocks?
I would, if you're long and sitting on a nice profit on any of these stocks or groups of these stocks, I would say congratulations, well done, very, very well traded. I would, however, consider putting in some stops on your position to close out should we get a significant downside move. Now, I can't give advice on that. I can't
Yeah.
tell you. It all that would be up to everyone's own pain threshold or anything else like that. I do know from personal experience that once you've been sitting on a paper profit and you start to see that dwindle, there's a great tendency to want to stick in because you think you're going to get that high tick price again, and that's not always the case. So to sort of paraphrase a Rod Stewart song, the first cut is the cheapest quite often.
Be cautious, be optimistic.
I like that. Yeah. I think
Because
that works.
I feel you can't really put a cap on any of these things right now because we just don't know. There's a lot of unknown in the world at this point. I'm sure even Elon Musk does not know what AI can do. Don't get greedy. That's also an important one. I think nobody should get greedy.
Yeah, that's so true. I mean, it is so difficult though, isn't it? Because everyone's sort of rushing into this. It's a fear of missing out. I've said that, used that phrase before, that the people are blindly piling into this. They don't understand the risks they're taking. They must be mad. I'm staying well away from it. On the other hand, you could be in the relatively early stages of a transformative technology, which you'll look back on in 10, 20 years' time and, thinking, good God, I wish I'd bought it back then. But then again, the infrastructure spending is now on a scale that has never been seen before. And invariably, you get a crash of some sort or another, and things come down to earth. And what looked fairly valued, what was overvalued, certainly, but what even looked fairly valued can suddenly become very, very cheap indeed, because everyone is looking around and saying this trade isn't working because some little aspect of it, something's shifted and sentiment changes. But as we saw with .com, yes, everything was affected, everything. So there are always winners, there's always losers. And I think that's just something to bear in mind as well. But the one thing I would say about all this, if you are trading these tech stocks, these AI adjacent stocks, certainly the semiconductors, as you know, they're extremely volatile, but also the hyperscalers. I just don't use leverage. I think that would be a key piece of advice that I would say. These things are volatile enough as they are, and there are some really dangerous products out there, particularly ones where you might have an ultra short position or ultra longs where you're leveraged maybe 2 or 3 times, and also the very way that these, in particular, leveraged ETFs, the way they are structured, means that they reset at the end of every day. So if you made 100% because the stock went up 50% yesterday, you can lose a lot more the next day. It's not a straightforward trade. Let's put it like that. It's complex.
Well, complex is one way to put any of this that we have been speaking about. This kind of ties beautifully into our second last segment. David, what are you bullish on, bearish on, and what is your wild card for this week?
Okay, right. Well, there's been a lot going on in precious metals. They had parabolic rallies up into the end of January, and then came the crash. And we've spent all the time since, until a few weeks ago, correcting and pretty much a bear market. But I really do think that we're starting to see them bottom now. Support seems to be coming in around 4,000 for gold. We're now about 4,400, which is proving to be quite an important level of, well, at the moment, resistance. Every time you get a little bit above it, it comes straight back through that. But I am interested in gold. I think it will have much more upside to come. I'm not sure if we're going to see a bit more of a sell-off first. And allied to that, my real pick would be, on the back of that, would be silver, because silver tends to exaggerate gold's move. They don't move in lockstep, but they do move together to some extent. And so I was a great bull of silver going back a few years, and now I am again. So I'm watching silver, and I'm not saying it's going to happen overnight, but I do think that over the next 6 months or so, we'll have a nice rally back in the precious metals. Bearish is oil. I think, looking at what has happened to oil as we have gone through this terrible war since the end of February, I'm astonished by the price action, really, in that absent a sort of an initial kind of boost higher. It was over $100 for a few weeks or so, but oil hasn't done what it did when after Russia invaded Ukraine, actually it did come back and it filled the gap that it made at the beginning of March, not so long ago. So it was back to pre-war prices. We are rallying up at the moment. I know there's incredible uncertainty about what's going to happen between the US and Iran, and certainly oil is up at the moment because it sees the hostilities escalating. So I don't know how the war is going to work out, but there are workarounds to Strait, and these have been ongoing. And I think that, together with the fact that demand growth is continuing to slow, we had the slowing demand growth story all the way up for about 18 months, 2 years into the war, as before the war started. That's now coming back as a bit of a story, so I think that's going to weigh on the price. But I have to say, it's a dangerous trade. It's a very, very dangerous trade. But I think I would just sort of, perhaps it should be my wild card, really. But anyway, I'll put it out there. It's my short. My wild card is the US dollar, and the trouble with this one is that it also very much plays into what's going on in precious metals. I know a lot of people say that precious metals are always inversely correlated to the US dollar, but that's not actually strictly true. It happens for long periods and then it doesn't happen. So what I'm saying is, if I think that precious metals can go up, I also think that the dollar can go up at the same time. And I think, although we're having a bit of a hiccup in it at the moment, I think, broadly speaking, that the dollar rally after a very, very disappointing 2025, I think that the dollar will continue to rally once we've got past this bit of a dip that we're having now. So there's my wild card.
Yeah. Thank you for that.
Not at all.
How do you decompress?
I'll be honest with you. I have a very quick and easy way of switching off, and that is as soon as the bongs go, the 6 o'clock news comes on, that's when I open a bottle of Sauvignon Blanc, and I sort of steadily make my way through that. And by the time that's finished, I'm mellow, I'm fine. But that aside, a little bit of exercise also helps as well. So now that we've got the cooler weather, so I can sort of like get back to that.
Yes. The weather is coming back to normalcy, I would say. I mean, I'm not sure if it's come back to absolute normal, because until it rains in the UK every 3 days, I feel like the weather is not normal. In fact, when I used to live in India, I would read books about how people in London always leave their house with a brolly, with an umbrella, right? And here, a lot of people don't even have umbrellas anymore. What is happening? Right? So yeah, the world has changed. I find decompressing really difficult, actually. And probably because I am more in a very news-oriented business, right? I have to keep a track of pretty much everything. But I have taken the plunge this week, and I don't know how to swim. That is a very sad piece of information for a mid-30s man does not know how to swim. But I have literally actually taken the plunge, and started swimming classes.
Superb. And how's it going?
It's going well, actually. I was initially very scared about it. I was worried that I might just drown, and B, I was to prevent that, I have got a one-on-one training program. So the break has been something that I had to muster quite a bit of courage for. But yeah, it has turned out really well.
And then once you've learned to swim, what's next? Training for the Olympics?
Well, once I have learned to swim, we will go Devon. Yeah, we can all go there, and we can open that fancy bottle that you have, and we can.
And open the bottle. Yep. Go surfing.
Go surfing. That's a wrap on this week's Zero Sum. Thanks to you, David, for talking us off the ledge or possibly back onto it. Your call entirely. If chip stocks and lockup expires give you a whiplash, welcome to the club. We have got the merge. From all of us at Invest, stay sharp out there and see you next week. Bye-bye.